What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have two monthly dividend ETFs. I'm going to review them. You guys wanted me to do a review on them. There are real estate investment trust ETFs, and I'm going to compare them against a very popular REIT ETF at the end. So some of these might help you with your dividend growth investing strategy. Again, this is not financial advice for entertainment purposes only. Disclaimer in the description. So I will do a stock analysis and dividend stock analysis on these REIT ETFs as well. So if you're new to this channel, make sure you subscribe again. Hit the notification bell because I'm pumping out videos like crazy. So that way you'll be aware that I'm pumping out videos. And make sure you smash that like button. Let's check these ETFs out right now. Let's go over the first REIT ETF. That's SRET, Global Act Super Dividend REIT ETF. It's sitting at 890. Has a volume of 221.11K. Year range is 843 to 1034. Its day range is 884 to 893, and its previous close was 880. So that's a major dip since the pandemic hit. It was at 1568, hit a huge dip. Let's look into the nitty and gritty on these ETFs because it's always important. You need to know what you're getting yourself into, the expense ratio, what's in the portfolio, and its dividend history. Let's check it out. So SRET assesses 30 of the highest yielding REITs in the world, potentially increasing a portfolio's yield. SRET makes distributions on a monthly basis, providing a regular source of income for the portfolio. SRET invests in REITs around the globe, which can help diversify both geographic and interest rate exposure. So let's look at their distribution yield, 6.69%, 12-month trailing yield, 7.04, 30-day SEC yield, 6.92. So here's the thing. Net asset value, 14%, minus 3.97 in 3 years, minus 0.21%, and 1.31% since inception. So looking at a few other things. Let's see, where is the expense ratio? So let's look at the REITs real quick. I'll go over the expense ratios shortly. So here's some of their top REITs that they have. WP Carey, I own them. Ares Commercial, Smart Centers, Keppel REIT, Charter, Northwest Health, PennyMac Mortgage. I actually own these guys. SunTech REIT, Capital Land Integrated, Ellington Financial, Gaming and Leisure, GLPI. I have done some videos on that. Getty Realty Group, I have done a video on them, very popular one. Blackstone Mortgage Trust, Waypoint, Dynex Capital, a lot of people like them. MFA Financial, NRZ, DOC, which I have owned and I'm made some changes to it, but still a really good one. NLY, Annually Capital Management, Armor Residential Rate, so AGNC. So right here, there's one thing. I have done videos on NLY, ARR, AGNC. One thing I don't like about them is the yield trap. So that's one thing that raises a red flag for me. So I always look at it, and here's the expense ratio, 0.58%. I found it. So let's go over its dividend history. It's 889, dividend yield is 6.82%. Look at these trends. Let's just start from the beginning. It was at 9 cents, 2016, still at 9 cents. Still at 9 cents, slowly increasing. Then it hit 10 cents since 2020. And then it's 6 cents, then it's 5 cents, and it still really hasn't rebounded at all. So again, looking at these trends over time, it was 10 cents, it was 9 cents, and then it was 10 cents, 6 cents, 5 cents, and it's still going down a little bit. This appears to be a yield trap to me. And, you know, what I like about real estate investment trusts are dividend hikes, especially real estate investment trusts. They should hike their dividend if they're a very good company. You have Armor Residential Rate, NLY, and AGNC. Again, once you start studying what's inside of it, because I'm not a fan of those three real estate investment trusts, because I don't like, I don't like them because they don't hike their dividend. Financially, they're a little iffy, and I believe that they're a yield trap. So you can tell me that I'm wrong, but the dividend trends in those REITs say otherwise. So it's just kind of a little bit of an iffy right there, but I have one that may be a little bit better to you. Let's check that one out. Or is it better? Let's look into it. So this is Invesco KBW Premium Yield Equity REIT ETF. It's sitting at 24.49. Its year range is 21.73 to 26.43. Its day range is 24.42 to 24.71. Its previous close was 24.45. Volume is 183.25. Let's check these guys out. So Invesco KBW Premium Yield Equity REIT ETF is formed on the KBW NASDAQ Premium Yield Equity REIT Index. This fund generally will invest at least 90% of its total assets in securities of small and mid-cap equity REITs that have competitive dividend yields and are publicly traded in the U.S. that compromise the index. So, all right, let's look into this. Distribution rate, 5.16%. That's one thing to look at. So let's look into a few more things. Management fee and expense ratio, 0.35%. Okay, so let's look a little bit into them. So they have a mid-cap value, 5.78, mid-cap blend, 2.20%, small cap, 64.38%, small cap blend, 23.72, small cap growth, 3.92%. Their top holdings are Global Net Lease, Necessity Retail Rate Apartments, APTS. Guess what happened with APTS? You'll have to look it up. OPI Office Properties Income Trust, Omega Health Investors, which I own. This one I have too. LTC Properties, I have them as well. National Health Investors, I have them as well. Blue Rock Residential Growth REIT, I'm going to have to look into that. And EPR Properties, I own that one. That makes them very attractive with the portfolio, okay? But there's more things that we need to look into them about. The total, remember, look inside. So Getty Realty is a good one. Medical Properties Trust, that's 2.68. Care Trust is not bad. Store Capital, all right. National Retail Properties. So UMH Properties, Stag, I have Stag. Plymouth Industrial REIT, that's a popular one as well. So the percentage-wise, what's inside of it? SLG Green Realty, I have that one. GLPI is a good one. Spirit Realty, I have that one. Gladstone Commercial Corp, good. A lot of people like them as a monthly dividend real estate investment trust. So there's some good things into them. But let's check out their dividend history. And this is one thing that we need to be aware of. So this is a monthly dividend real estate investment trust. It was at 22 cents, then 21, then 19, then 20, then dropped to 18, then it hit 17, then it hit 15. Now this is 2017, 2018, 22 cents, then it hit 17, then it hit 15, then it hit 18. It was a high yield, probably because of the pandemic. Then it dropped 14, 13, 12, 11, 10, 9, 10. So with a dividend yield of 5.17% and it's 24.48, it's almost better that it's just, I know it's trying to rebound from the pandemic, but an expense ratio a little high like that, and the dividend trends that aren't very attractive, and it's 5.17%, you can almost argue that it's a yield trap as well. I mean, what's in it, and it's okay. I mean, I think it's better than SRE REIT or the Global X Super REIT because of the expense ratio, and I think it has better overall stocks in it. I mean, this one's going to take a while to recover. SRET is probably never going to, it's going to be very hard for it to increase its dividend over time. I think there's potential for dividends to change, but I mean, it goes from 20 cents to 14 to 10 cents. I mean, it's dropping. I mean, when I like REITs, like or Agree Realty Corporation or Stag, which I own, or well, EPR I know took a hit. So, I mean, that's kind of a given because of the pandemic. But, EPR Properties at one point was hiking its dividend. And this one's decreasing over time, which is a turnoff. I'm going to compare these two now to one that I think is much better. which I'll reveal to you. And that's the Vanguard Real Estate Index Fund. Now, this is a quarterly dividend stock. It's sitting at 104.58. Its year range was 88.83 to 116.71. Its day range was 103.76 to 105.27. Its previous close was 103.55. So what's inside Vanguard that I like about it, and why is it better than these two real estate ETFs, especially a monthly real estate ETF? Why would a quarterly dividend look better? So I'll reveal that to you, and I'll explain to you why. So first, let's just look at this hypothetical growth in this is in 2012 to 2022. There was a significant growth. The price per share has increased over time, and a lot of people like this ETF in their traditional or Roth IRA or their M1 Finance fractional share dividend portfolio. And the other thing is, okay, there is a little bit of a risk. It's at a 4 for risk potential. It's very, it can be volatile, but the expense ratio is 0.12%. So that's even more attractive. The expense ratio is less than both of them. And we need to see what's inside of VNQ. Let's start with the big ones. Prologis is a big one. American Tower Corp, AMT, is another one. Crown Castle International is a good one. Equinix Public Storage, PSA stock, 3.26%. SPG, Simon Property, is 2.56%. Digital Realty Trust, 2.19%. Realty Income, which I own, 2.18%. Welltower, 2.11%. The Vanguard Real Estate Fund International Plus shares, okay. But Avalon Bay, that's a good one, 1.94%. Weyerhaeuser, they're starting to hike their dividend, 1.70%. Ventas, VTR, 1.25%. Extra Space Storage, 1.47%. So you're seeing a better one. Duke Realty Corp, I did a video on those guys. Really good one. VC Properties, I own those guys. Health Peak Properties, that's a popular one. WP Carey, that's another one. Iron Mountain, I own those guys, and they're excellent dividend growth stock. Gaming and Leisure Properties, did a video on them. They're a good one. Store Capital, 0.44%, very good one. So Stag is in there. HTA, MGM Growth Properties, and I think they had IIPR somewhere. Don't quote me on that. Look at that. EPR Properties, Apple Hospitality Rate, they're coming back. I'll find out where they were, but I'm pretty sure they were in these guys. Maybe I'll get back to you guys on that. But let's see, what else? NHI, I have them. I mean, this is a huge, strong portfolio. And, let's just say if one, for example, entertainment or leisure properties take a hit, that's fine because this is so well diversified. And let me jump to the dividend history. Don't let 2.88% fool you, because right here, all right, you got a dividend of $1.05. It is a quarterly dividend. Let's start from right here, 2013, 63 cents, 61 cents, $1, 4, 6, $1. So you're getting $1 out of certain times. And the dividend is pretty consistent. And sometimes, look at this, during the pandemic, it was hurting a little bit, but look at these hikes right here. 126, 169. Look at these dividend trends on these guys. 63 cents, 61, 108, 45, 69, 68, 103, 52, 72. You get 91 cents, 76, 59. You're getting a little bit more consistency, what I like about VNQ. You're starting to hit the 60s and 70s, and you're getting $1, usually in December. So you're getting some consistencies. 50 cents, 60, 70. You're even getting sometimes higher than that. 70 cents, 144. So eventually, I mean, the price per share is going up. Dividend yield is 2.88%. Don't let that fool you, because look at those dividend trends. And that's what makes these guys more attractive. I mean, quarterly, if you add up, all these numbers, 10, 20, 30, that's 10 cents. This is still beating it quarterly, with KBWY. And SRET has taken a long time. So in the long run, this one's way better. So let me know what you think of these two real estate investment trusts and these two monthly dividend ETFs. So if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Almost 8,000 subscribers. Make sure you hit that subscriber and hit that notification bell. I will post a video tomorrow for St. Patty's Day. You guys be safe out there. Have a good one.